Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meizinger, your host, and today I'm the guest speaker also. So I get to do both roles, where I'll be talking about hedging U.S. dollar movements relative to the Canadian dollar. Just before we get started, I want to just remind everyone that Patrick Soresna will be with us on August 4th, talking about technical analysis, how you can trade FX pairs, options using technical analysis. I know a lot of you are interested in that sort of format or methodology. Jack Crooks will be back with us on August 6th, talking about U.S. dollar. You know, will it explode or will it decline? That's on August 6th. You can't miss that one for sure. Jack's always really great as he presents some very valuable material. Stanley Dash will be with the ISE on August 11th, talking about opening an account. He's, of course, a broker, and how you can trade FX options, and not only FX options, futures and spot, all through TradeStation. Jack Crooks will be back with us on August 18th. And then Mike Tusaw from Know Your Options will be with us on August 25th. So that's sort of the schedule in the for the next month. Why don't I get started? I'm going to be talking, again, this is your host, and today I'm going to be giving the presentation talking about, this is Steve Meizinger, talking about hedging U.S. dollar movements relative to the Canadian dollar. So if you're interested in learning more about options in general, of course the ISE is a great place to go. As we talk, you know, we bring in special guests, and there's a lot of archive materials on options, whether it's debit spreads, credit spreads, volatility positions. Your broker does a lot of that too. And also another great place to go is optionseducation.org. So I'd urge you to go there. Actually, I haven't checked in the last couple of days, but I'm the presenter on the Covered Calls podcast. So there are plenty of things there because I am also an OIC instructor. And if you need a copy of the characteristics and risks of standardized options, you can get that also through the Options Clearing Corp, the OIC. Options refresher. Remember, options are about rights and obligations. So you always want to think, you know, quite often when I start to talk to investors about options, people are going to lean to being a buyer or being a seller. There's nothing wrong with that, but you need to understand the other side of the fence. So if you are a buyer, you need to understand, yeah, there's a benefit to having those rights, the limited risk, but sellers are benefiting from the premiums. Now, if you like to sell options, that's great because you're focusing on premiums. However, you need to really consider that obligation that you may have to be performed or may be asked to perform, that may, of course, occur. So rights and obligations are really important. The buyers receive rights, sellers the obligations. So let's talk about it in the context of FX, foreign exchange trading. Of course, you know that you can trade options on the 6 pairs, and we're going to add 3 new ones on Monday. So if a lot of you that are listening in the future on archive, you'll know that the Mexican peso will be trading by then, the Swedish krona, and also the New Zealand dollar. So that's all going to occur very, very soon. Contracts, the options are contracts giving the right, the buyer, to sell an exchange rate for a specific period of time at a certain price, and you're going to pay a premium for that. Sellers are targeting premiums. So the obligation to buy or sell, so the obligation to buy is a put, the obligation to sell is a call, and that will be at a certain exchange rate. Of course, that's the strike price for a certain period of time, and the seller is going to receive a premium. Option investors have a lot of choices. In fact, today we're going to talk about hedging, but of course there are a lot of other ways to trade options, whether it's just a limited risk, buying an option, a put or a call, selling, let's say, a call spread or a put spread, maybe even getting into vertical spread, you know, or I shouldn't say vertical spreads, but volatility spreads, butterflies, iron condors. And just because it's more complicated doesn't mean it's better. Just because it's simple doesn't mean it's better either. You need to really think about what are your goals and what are your risk tolerances. So let's just take one step back. Calls are going to allow investors to hedge rising asset prices, whether it's IBM, the SPY exchange traded fund, or the US dollar against the Canadian dollar. A call will benefit, in the case of the FX options, if the US dollar is rallying, because the ISE FX options are dollar relative, which means that the US dollar is the base currency. So puts are going to allow investors to hedge falling asset prices. So if you're bearish on the US dollar, well, you might be looking at puts or purchasing puts. So as I said, they're dollar relative, and you might want to say it's what one US dollar is worth in another currency. So if you think about the mathematics behind it, you have, of course, a pair, and you have the US dollar in the numerator, the opposing currency, also called the counter or quote currency, in the denominator. So it's how many of the US dollar, when I look at the US dollar, what is it worth relative to another currency? So when I'm going to that other country, what am I going to get in return? And that's the way you want to remember that these are traded. So today, when we're talking about, or I'm talking about the Canadian dollar, the US dollar is worth a little bit more than the Canadian, at least currently it is. Of course, about a year and a half ago, the US dollar actually traded at a discount, but today it's trading at a premium of, let's say 9 or 10 cents. So it's trading around 109 or something like that, depending on the moment that you're looking at it. We have 6 pairs, and this is really important because you type these symbols into your equity options brokerage account to find the option quotes. You can also go to the ISE site and get the option prices on a little bit of a delay. So you see that one thing that's consistent, it's dollar relative to the other currency, whether it's the yen, the Canadian, the euro, British pound, Aussie dollar, or Swiss franc. And the symbols are there as, YUC, Canadian, CDD for Canadian, EUI for the euro, BPX British pound, AUX is the Australian dollar, and lastly the Swiss franc. So calls are going to benefit if the dollar is rallying, and puts are going to benefit if the US dollar is selling off. So just to sort of drive this point home, you could take a look, and you can get this at a lot of different places on the web, but I just went to, I think this is Yahoo, where I just got the dollar versus euro, and the quote at this time was 71.47, 71.49, pound was 60.83 at 60.85. All we do is we multiply these values by 100. And that's all. So it isn't, quote unquote, it's sort of like an index, but it's a very simple index. There's only one really component to this, and it's the ratio of the dollar relative to the other currency. And we multiply that by 100. So tonight we're looking at the Canadian dollar, and it's worth roughly around 110, and I'll show you. And a lot of you trade the spot market, so you know that you may not have the dollar as the base currency. For instance, like in the Aussie, it's going to be the reverse. And if you want to actually calculate that, you just take the inverse of the reciprocal, and you can come up with 124 on an ISE value would equal about 80 or 0.80 in the futures market. So, it's very easy to calculate that. A lot of us look at the futures market, or even the spot market, I should say, that trading $1.39. And the ISE pair value equivalent would be 71.66. So it's just an inverted number. And I know all of us look at the dollar yen being 96.25. Swiss franc is very familiar, as is the Canadian. So, the ones that you really need to just learn a little bit more about is the inverted number of the the British pound and the Australian dollar. The others, I think, are pretty straightforward. You're used to that.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.